Our next session, ladies and gentlemen, is a panel discussion on powering business spends with corporate cards. The moderator for the session is Vishwanath Nair, who's the banking editor for BQ Prime. He will be joined by Naveen Bindal, who is the co-founder of EnKash, Amarjit Singh Walia, Head Consumer and Commercial Cards, ICICI Bank, Vivek Gupta, President and Head Wholesale Banking Products, Axis Bank, and Sandeep Ghosh, Group Country Manager, India and South Asia, Visa. May I call upon Vishwanath Nair to take it from here, please.
Hi, sorry, I'm the only one in jeans on the stage right now. But we've got our panelists sitting right here. May I please welcome you all? It's Naveen. It's Vivek Gupta. It's Amarjit Singh Walia. And Sandeep Ghosh. All right, the topic that we're going to discuss today is powering business spends with corporate cards. Now, to be fair, we had a conversation before this, and I was surprised that corporate cards are not just limited to T&E or what they described as dinner parties. But then there is so much more that corporate cards can do, and that's what we're trying to discuss here with our eminent panel. First, what I'm going to do is give about 2 to 3 minutes to each of the speakers. They can describe their thoughts, explain what it is that they want to pioneer with the corporate card market. Firstly, starting with Naveen.
Sure. Hi everyone, this is Naveen from EnKash. I'm one of the co-founders at EnKash. I think the key thing to sort of look at when we talk about corporate cards is the need of why somebody really needs to sort of use an instrument like corporate card, right? All of us have seen how commerce has got digitized for consumers, for people like you and I, where, back in the 2008 and 9, there were very few sort of payment options that were available to us as consumers to make payments. And that was purely because commerce itself was not really happening online that much, right? The last decade has seen an enormous amount of innovation that has happened on the consumer side, right? There were wallets, there were UPI, there was auto OTP reads and one-click checkouts and whatnot, right? Why was this happening? This was happening purely because the commerce for P2M, the buying commodities for consumers to merchant was actually becoming, it was moving online at a very rapid pace. Similarly, if you see now business commerce, if I say B2B e-commerce is growing really, really fast, right? Things are getting digitized. I'll probably give an example to talk about it, right? I think 6-7 years ago, it was very common to see companies procuring their IT equipments like laptops, office supplies and things like that from a local vendor somewhere close to their office, right? But that's changed pretty much now, right? People now go to Amazon B2B or Flipkart wholesale, or there are multiple other platforms where you could just go buy a laptop of your choice. And for obvious reasons that there are clear benefits. One, you get a GST compliant invoice, you get the laptop delivered at a choice or a location of your choice, you get a model which is of your choice and probably at the best price, right? So commerce for B2B is moving online, and that is why the reason for a payment instrument that can solve for all of these challenges, right? So for obvious reasons, corporate card becomes an easy tool to do that. For one reason, that it provides you a good end-use monitoring and a control over what exactly is happening on a company's behalf, right? Because it's in case of a company, when spends are happening, it becomes very important for the company to know where is the employee of the company or a particular department or a procurement department is spending the money and for what reasons, right? Which is where this card instrument becomes absolutely important, in my view.
Thanks so much for that, Naveen. Amarjit.
So I think corporate cards have gone a real long way. If you want to look at something 5 or 7 years beyond. For a bank like ours, the definition was, I would say, restricted largely to travel. People would work with the agencies, travel corporates, as also on the T&E side of the business. T&E side being a little smaller, and come COVID and little before COVID, I would say the whole definition started in a way changing. And I kind of agree to what Naveen is saying. It's more about solutioning as to what our self-employed segment requires, right? From small merchant all the way to a large corporate here. Clearly, the requirements are such that at every intervention, this card can step in. And for us now, going by the ecosystem approach and understanding the every single possibility of a corporate card has really helped us. So just to give you one example, even if you look at healthcare as an industry, starting from the requirements of the hospital and the purchasing of the hospital, the supply side, and also the both payable and receivable side of it, there's so many opportunities today which can be plugged in, right? And traditional, way of making payments, NEFT, RTGs, etc., have been always there, but the whole gap of receiving the money on time and paying the money on time had to be bridged, right? Happened earlier, but as we speak, a lot more is happening now. And I think many of our fintech platforms have really provided that agility to bridge this in a very big way. And we see that, as a bank like ours, we will grow this. It's a focus area for us. This would grow multifold in the coming future.
All right. So that's one bank over here. I'll come to Vivek later. But first, Mr. Ghosh, if you want to spell out what your thoughts are.
Okay. So first, very good evening to everybody here. I must start with a disclaimer. I'm kind of new to the world of payments and digital payments, but my three other panelists will keep me honest if I go off track. So to begin with, maybe just to demystify the term, because corporate cards, commercial cards, T&E cards, purchase cards, and sometimes even small business cards can be used somewhat interchangeably. I'm not saying they're identical, but by and large solve the same purpose. And the idea that we're all discussing here is basically digitization of business to business, business to government payments, and even business to small business type of payments. That's what we're talking about. And we've obviously seen phenomenal uptake in digitization of peer-to-peer and peer-to-merchant payments in the country. It is not that B2B payments are not digitized, they are, but largely this runs, cash and checks are getting displaced by RTGS and NEFT. So the moot point here is that, is there an opportunity, or how large is the opportunity to embed cards? They could be plastic, they could be virtual, but to embed B2B, to embed cards or credentials in B2B flows. And we believe as Visa that, there are various studies that have taken different approaches, but the overall global B2B payment opportunity is about $120 trillion. And if you bring that down to an APAC level, it's about 50 trillion. And if you bring that down to India, it's about $14 trillion. And there are some other studies which kind of point to a market opportunity of digital payments in the vicinity of $5 to $6 trillion. And the interesting part is, even though corporate cards in India have taken off in the last 5 odd years, the total volumes being processed on corporate cards currently is about 40 to 50 billion. So we've only scratched the surface, and I think over the course of today's discussion, we probably will try and bring out what the opportunity is and why is it that it's only grown to this level, and what's the opportunity to sort of expand this market further.
Sure.
Hi, good evening, everybody. So look, don't let Sandeep fool you, by the way. I think he's a modest guy. Look, couple of things. We've taken a very different step at looking at commercial cards. 3 things I want to call out. First, see, traditionally the business has been optimized for spends, right? I think it's important where we are today. The lens we are taking to is, can we optimize spends and profitability, right? So that's one dimension that we are additionally bringing on. So I just want to kind of break it up a bit. So the second lens which is important is, do we look at commercial cards largely from the construct of intermediating B2B payments? Is it very transactional, or as a full service bank like we are, as Axis, large anchors, a whole bunch of commercial banking clients and suppliers? Do we look at it in a more integrated way from a supply chain point of view? So that by definition has got us thinking, saying, look, it can't be B2B payments alone in a transactional sense. It has to be working capital, right? The anchor, the client is one, and the client has a value chain, right, which has large size suppliers, small time suppliers, and a long tail of very, very small suppliers, right? So if you're taking an integrated working capital solution to the client, I need to solve for the client in its entirety. So how do I fit commercial cards into that constraint? The third thing I would like to kind of quickly add on, slightly different from the others to complement, is look, proportionality, right? So as I was discussing with the team this morning, like how do we keep this interesting? So I was told like the spends on cards overall in the country is about 7.5 lakh crores thereabouts. 30% is through commercial cards. Now proportionality for me and for us as a team at Axis means, look, how do I make sure that a large number of these cards are with the smaller end of town, mid-market, MSME type customers? How do I make sure that it's also reflected adequately in the limits that these customers are therefore utilizing? Now that is the segment that by intuition needs most working capital. That's where the focus of the government is, that's where basically a lot of the untapped opportunity is to basically make them grow. That's a growth engine for a vibrant young economy like ours, right? So again, it's about saying where we are today, right? The B2B MSME contribution may be X. I think I see going forward the next 3 years that to be a much larger proportion. That's what we are focused on.
All right. Thanks so much for that, Mr. Gupta. First, let me take the bankers for my next couple of questions, and then I'll come to Naveen as well as Mr. Ghosh. Amarjeet, as well as the question here is, why have banks not looked at it seriously? You said that pre-COVID this was largely T&E. Now you're seeing these opportunities, but these opportunities have existed for ages. It's not something that's new you've discovered. What kept you away from looking at this as a business opportunity?
So as I said, clearly it's not that staying away was clearly, by choice. There were various instruments the bank always had, right? I mean, whether it was funding basis of collateral, a CC or an OD and stuff like that, were always available, right? And also for us as a bank, the whole, the unsecured way of funding, have in the last few years been kind of structured in a very, very constructive way. So in a way that, understanding the business. See, every business is different. Even within the business, you pick up one dealer versus the other. Let's take an example of an OEM here. Let's say Maruti dealers, for example. You pick up one versus the other. All the understanding about the business is very, very different, right? So for us, the objective was to get on the on the drawing board and see that should the underwriting be done in a very, very different manner, okay? And what was emerging in the last 5-7 years is like, let's take another example of a fintech owner. Person walks up and says, look, I want to pay for my marketing expenses, right? But for you, the balance sheet is not going to speak the language that you want to see now. It's a very traditional approach vis-a-vis what you see now. Therefore, the underwriting had to be really seen from a very different lens. I think banks like ours in the last few years have transformed ourselves to see this opportunity in a very different way. And while we'll coexist with all the other forms of funding that we've had, but now with our ecosystem approach, we're opening up many such ecosystems. And that's one reason why, as I was mentioning, travel used to kind of be a very large portion of the corporate spends, which isn't now, so to say. There's a lot more that is happening.
Okay. Mr. Gupta, the question I want to ask you is, working capital is a sort of a, overall sort of broad brush term. But each instrument within that you talked about here, there's an OD, there's a CC, all of these have specific use cases. That's why companies go to these. But if you were to club them to under one, say, product, does that lead to some problems? Is it difficult to sell to a customer?
In the sense, sorry, could you just explain?
My point is that if there are so many various instruments within the working capital umbrella, to reduce it to one product, or are you thinking of, say, a CC card or an OD card, a separate card for each kind of instrument? How are you thinking of this product?
No, so it's very important for us to understand that any product that any bank has to have this very specific end use, right? A lot of the challenges we've had historically around credit cycles, etc., is the end use is very vague, right? It's not with any particular tenor in mind, right? And typically we don't look at diversification of the book as one more aspect which kind of hits us in the face. So the way I would like to think about this is, look, commercial cards, right, is a very useful adjunct to a traditional working capital provision, right? Why is it very useful? Because it gives a lot of flexibility, right? It is easy to get going from an adoption point of view, especially as clients post-COVID have got used to digitization and they have adopted this, right? Third, it's very important from the client's point of view, which is the only view that matters to us, that it allows an extension of what is the days payable outstanding. But it allows an extension of days payable outstanding without actually making it adverse for the supplier, right? Because of the virtue of the billing cycle and the 45, 55-day odd period that the client enjoys. So the important thing I'd like to highlight is, see, if you want to have a win-win outcome in a supply chain, which is not transactional, that works for the anchor or a mid-sized corporate and their suppliers, it has to benefit all, right? So commercial card from that point of view actually, in my view, fulfills that gap very, very well, right?
Naveen, at EnKash, the way you are looking at the product is targeting a specific kind of business, right? A smaller business trying to convert their payment needs into a corporate or a commercial card. I'm just trying to understand how are your customers responding to it and how are you dealing with these questions?
Sure. Maybe I'll also try to link it to the previous question that
Sure.
you asked regarding, what was so different in the earlier days versus now, and how the need is really evolving, right? I think one of the aspects, apart from what Amarjit and Vivek highlighted, was also about the product solutioning. You really can't go one size fits all in this market, where you have to come up with solutions that are absolutely required for segments that you go after, right? So for example, a lot of our customers come back and say, can I create a virtual card that can auto-destroy itself after the transaction is done, right? So let's say I have a new employee joining the team and I want him to go buy his laptop from Amazon, and once he's done that transaction, the card should auto-destroy because I don't want any kind of misuse to happen, right? It's a very specific requirement that the product solutioning has to meet, right? And likewise, there are plenty of other requirements where somebody says that I have an office in Coimbatore and there is a certain type of need of petty cash management, but I don't want them to go to ATM withdrawals out of that or certain other types of transactions, right? So how do you sort of block certain transactions? How do you allow them a certain limit on the card and things like that, right? So I think to answer your point as well, in the mid-market, when we went and saw the gap was also largely because the platform associated with the card was kind of still a little bit primitive, if I may use, where people needed solutions that can solve the real challenge. The card by itself was giving them the ability to use that credit for that 30, 45-day period, but that wasn't really solving 100% of their challenges, and hence the adoption was slow. The second thing that we saw was that people needed shorter billing cycles. Somebody said that, look, I only need to use this card for, say, a short-term capital requirement I have for 7 days. For example, GST payments, right? We briefly touched upon the market opportunity size. All of us know that the GST is at somewhere about $200+ billion annualized, right? Many people, have to sort of tap into their credit pool during the 18th or 20th of a month when they have to pay for GST, right? So can a corporate card perhaps give them, let's say, a 5+5 day cycle or a 3+3 day cycle where they can use that credit to pay off their GST, return back the money in 3 days time, and just get charged for those 6 days, right? Is that something that one can do? I think these solutions were really the requirement of the market, which is what at EnKash we really saw, and we started to solve those challenges. Today, I think those are the key things that really resonates with our customers the most.
All right. Sandeep, the question you pointed out about $6 to $7 trillion market that exists in the commercial card market. What has kept India from reaching there? You said that we are doing only a fraction of it at this point in time.
So already, the co-panelists have kind of touched upon it, but if I'm like kind of in a way summarizing.
Summarize it, yeah.
So one is what Vivek talked about is creating a very holistic solution and proposition. Number two, what Amarjit talked about is ecosystem play. So the difference between a traditional consumer card, be it credit, debit or prepaid, There is of course segmentation in consumer cards, but in the corporate world, in the B2B world, every industry segment has very different working capital cycles, has very different players. The bargaining power between supplier, dealer, distributor, and the anchor varies from industry to industry. So you need to have ecosystem level customization. That was Amarjeet's point. The holistic point that Vivek made in terms of the solutioning. It's not merely about saying, you are today making a payment in this form factor, I will replace it with another form factor. I will replace RTGS with a card. Not good enough. You have to embed financing in a holistic manner. And the third point is what Naveen talked about, which is the platform play. So holistic solutioning combined with ecosystem approach, combined with a platform play, where you are not just addressing payment, but you're also providing accounting, reconciliation, MIS, moving a whole host of friction points, pain points, and then if you're able to then, on top of that, like sort of the icing on the cake, throw in certain specific rewards and benefits. They're not going to be as reward and benefit rich as consumer cards, but throw in certain specific rewards and benefits, then you start to get a very compelling proposition. And that compelling proposition doesn't necessarily replace working capital finance. It doesn't replace RTGS payments. It augments, it complements, and a portion of that, be it 5 trillion or 15 trillion, doesn't matter, a portion of that business volume or payment volume will then shift to card rails. So even if you are able to address 20% of 5 trillion or 10 trillion, it's a massively large number. And that's what's going to happen with commercial cards. So commercial cards, and right now our focus thus far has been a little more centered on domestic payments. These cards, and there are payment solutions also for cross-border, because small businesses and mid-sized businesses also have purchases and sales happening cross-border. So essentially, it's about getting solutioning together with ecosystem approach with a platform play, which is where the fintechs come and play a very vital role alongside the banks and networks like us and the anchor client. You get all that together is when you get the whole thing functioning to its full potential. And that's when you get maybe 20-30% of that payment volume that we're talking about moving on to card rails, which is what we see in most of the developed markets in the world.
Let me come back to the bankers again. Amarjeet, the question, and feel free to jump in whenever somebody else has a point to compliment. You don't have to wait for your turn for that. So Amarjeet, the question I wanted to ask you is with respect to the business cycles that have existed in India and how commercial cards have performed. You said that pre-COVID it was largely limited to a specific use case, right? However, how has the performance been, say now, when you're expanding it, and now that things are coming back at normal?
No, very well. Clearly, as I was mentioning, the self-employed is no different from salaried in terms of spends, right? I mean, your spends may be slightly different because you're buying, for the corporate side vis-a-vis, personal side of it. In fact, lines were quite similar, and the point that Sandeep was mentioning, the consumer commercial linkage was missing. Okay, people would spend on the consumer cards, and then sometimes during taxation times look for segregating the expenses and stuff like that. So for us, we are seeing a very, very healthy pickup. In fact, the volumes are probably 2 or 3x of the volume that we're seeing pre-COVID, holding very, very well. Very new avenues are getting opened up. While traditional thought about who will pay the interchange kind of a thing is also getting, in a way, moved into dynamic interchange, so to say. And most of the solutions that we're working with the fintechs are being provided basis, what really you're solving for, and therefore, how many bips come from where to be able to construct it in a manner that it's a win-win for all. Right? So clearly, for us, cycles have been fairly good. There was slightly higher, I would say, restructuring during COVID times for this segment, but we didn't see any adverse.
All right, thanks for that. Mr. Gupta, the question for you is collaboration. Now, what I want to understand is how Axis Bank, as well as the broader banking industry, how are you looking at collaborating with companies like maybe EnKash who are in the same business and expanding this offering to newer things?
Look, I think it's not specific to commercial cards. I think that's a reality, right? That ultimately, if you have to solve for a customer or you have to solve for an ecosystem, right? Today, the reality is customer needs have evolved, are evolving, and that's not going to change. So we have to have an humility to understand that we can't do it ourselves, right? And therefore, partnerships is the name of the game, right? We also have to understand that, look, what are our core competencies and what are not our core competencies, right? I think, to be honest, the way a bank, being a regulated institution, would look at things would be very different from a fintech who typically looks at what is one narrow but big enough problem that I can go after in a very concerted way, right? So how do we leverage that? So specific to commercial cards, look, I think we have our own thought leadership, which we are leading with, and interestingly so, what we've done is, I think we've looked at the business by making it part of transaction banking, which is not the case in most of the financial institutions in the country, right? And even globally, very few. So that we have a full integrated offering. What we're also doing is recognizing that, look, there are large anchors who have, for instance, gone around payments and working with fintechs in a specific way. So, look, if those are common clients of the bank, there's no point in competing. How do we actually work together, right? But the idea is therefore to leverage off, say, an EnKash, right? But also provide the other, working capital capabilities to the same anchor client, right? The anchor wants to connect one pipe to a fintech or one pipe to a bank, right? So there's no point in basically saying, look, take 7 pipes and get connected with 7 banks. So simplification is the name of the game for the anchor, right? So we basically saying happy to come along, right? And basically feed off that one pipe because there are many other things that we can solve for. So cut a long story short, need to coexist. It's an and story. We got to recognize what we can do and what we can't do, and to the extent that others are better than us, how do we collaborate to solve for the client and to solve for the ecosystem?
Right. Naveen, you agree with this, or you want to add something to it?
No, I absolutely agree. I think as a fintech, I think there are certain advantages that we have, whether it's from a product solutioning point of view, our ability to innovate, and come about with new technology, I think is much easier that way. While banks have their own advantage, they bring a large balance sheet, right? And unless you really combine these two things together, you really can't solve for it, right? One of us can't really solve for it alone, very clearly.
And if I may just jump in,
sure.
one other very major area for collaboration when it comes to corporate/commercial cards, especially when you get into the small business segment, is in risk underwriting. Now, a bank, any bank in the country, doesn't bank all customers or all SMEs. So even if you have a relationship with the anchor client, which could be a Hindustan Lever, which could be a Reliance, which could be Novartis, it could be anybody, you may not have relationships with all their supply chain participants. Now, the moment you come with a commercial card proposition and you want to embed financing, you will have to have the ability to underwrite, if not 100% of that ecosystem, but a large proportion of that ecosystem for the proposition to make sense and for it to gain the right level of traction and momentum. Now, how do you do that? So this is where, things like Oaken and networks like Visa, with solutions that we have around, business transaction scores and data that we have and data that other participants have, can also feed into that underwriting and decision-making process, right? So the collaboration quotient is driven up by, a certain set of things that fintechs bring to the table, but also, specific partners, networks, and can also bring in a lot of other insights, particularly when it comes to risk underwriting.
Coming to the underwriting part and the nature or the quality of this collaboration that we're discussing here, how far are you collaborating? Is it just, we can't do this, so you do this for us, or is there something more to it in terms of the bank and fintech?
We've gone far beyond that. So clearly it's just not a forward or a backward integration, so to say, but the whole solutions are being designed and thought through together. Okay, and I'm going back to my example of the ecosystem. When you look at, pick up one such example and see, okay, there are these 20 different things, and I completely agree with Vivek saying, a customer desires a 360 approach, and I may require different instruments at different times, but point is, are you kind of giving me a solution there? And how much of a process efficiency is coming in? How much of a convenience am I seeing? How much of my work is being taken over, and at the same time, I have the control of it. I mean, so today we work with, large set of fintechs today, and I think the collaboration goes much beyond saying I do this, you do that. And I think that's the name of the game really now. Because that's what the customer really, wants you to come and say, understand my business, give me a solution that works for me.
Yeah.
And many a times you have to do it very customer specific.
I want to ask each one of you this question. You mentioned RTGS and NEFT being utilized at this point in time. How do you overcome that cost component? Because those routes are free at this point in time. For a smaller company, it's free of charge to send money to their partners. How do you overcome that? I know there's a free credit period with commercial cards, but then how do you overcome this free transaction challenge?
So I let Vivek and Amarjit chime in, but the fact is that RTGS NEFT is free just in terms of the making the transfer. The concept of commercial card is to actually not just make the transfer, but there is a credit period and benefits and other features. We talked about MIS, reconciliation, a whole bunch of things. So purely, that's a conversation that banks have with their anchors and anchor clients and the ecosystem participants. Also, don't forget that the rate of interest at which a corporate borrows is very different from maybe their long-tail suppliers. So there is an arbitrage between the interest rate that a large corporate pays and its long-tail suppliers pay. So there are various things, but Vivek and Amarjit would be grappling with this more closely.
Yeah, look, I think we got to look at costs that are end-to-end costs, right? So it's important for us to recognize, to Sandeep's point, if I'm a small end of town supplier, right? What am I interested in? I'm interested in, look, is my key buyer going to pay me on time, right? To get paid on 10 days for my account receivable is a big thing, right? To have that certainty. So commercial cards gives you that certainty. Second, the small end of town customer says, look, I'm really interested in focusing on growth. I don't have the mechanism, the wherewithal to deal with reconciliation, invoices, etc., right? Give me a solution that solves for growth, solves for simplification, and allows me to get on with my business. That's what card does. So the third thing is from the anchor's point of view, right? Look, I think it's perfectly fine if you're looking to solve for a treasurer, that there could be an aspect of, look, can I make some extra, few pennies, a few rupees on the side based on a quid pro quo that I have around making payments, right? So for them it's like increasing the efficiency of the treasury, call it rebates, right? So hence I think we got to look at these things in totality, right? The most important thing I would like to say is, does it create a win-win for the supply chain, right? And I think that's the view I think we should take from a commercial card perspective.
Do you want to add something to Samir?
No, I think what my fellow panelists said is absolutely correct, right? I mean, it's, in my view, NEFT RTGS is primarily just solving for, as Sandeep said, the transfer of the money, right? There's a lot more beyond that which the customer is expecting, right? He needs to sort of solve for credit on tap, and a commercial card product really solves that problem. I need to make a vendor payment, let's say today evening, 6 o'clock. I really don't have time to go get some, documents sorted to get a credit facility available, right? Credit card or a corporate card just gives me that facility. I get onto a platform, make the payment, the supplier gets the money, and I have the ability to pay this money back in literally like 3 days time and pay only for the days I use the money for, right? I think those conveniences together with the ability to get credit on tap makes the right solution and the value proposition for the end customer, and hence he's happy to pay for the cost of it.
But is this a point of friction for you at all when you're actually on the field?
No. I think a lot of our customers come in and say that this is much beyond just solving their credit needs. I think there is a lot of convenience aspect into it, which is where they come to us. a lot of our customers come back and say that, look, in the past I've not been able to decentralize a lot of my payments that I make. It always used to come back to my central office. My CFO was always bogged down in handling a lot of payments across different departments, and there was challenges around reconciliation. But if you give me an ability, which is what EnKash does, as one of its core value proposition, is to decentralize these payments, allow these companies to create cards for every specific department or a specific use case, tie them back to the invoices or the expenses that are being made, automatically reconcile them and show it to the central office, right? That makes the life much easier, and hence the value proposition clearly is very strong there.
All right. We have about 5 odd minutes left, so we'll take a few questions from the audience if anybody's interested, to any of the panelists, whoever you want to choose. We have about a minute.
Before the question comes, just to add to one more point that, today we get a lot of anchor corporates who come in and say, look, we've been dealing with these suppliers for a very long time. Maybe we're not guaranteeing a payment, etc. So we can tell you, here's an A plus supplier, or A supplier and B supplier, and so on and so forth. Gives a lot of comfort in terms of underwriting. So clearly that started expanding in a very big way.
Any questions out there? Seems like nobody's cleared all the doubts out there. Okay. Gentlemen right there. Somebody please pass the mic. Introduce yourself, sir, please.
Hi, this is Akshat Bella here from Bharat Next. One quick question I had was, what you guys are doing from a corporate cards and spend management perspective, usage of cards is great, right? We haven't addressed the elephant in the room in terms of, how do we go about issuing these cards as well, right? While corporate cards is great, you have relationship with corporates, right? How do we sort of address the mid-market and the SMB market, right? Which is the MSMEs, the SMEs, right? Because that's where the bulk of the B2B payments is going to come from, right? A lot of them are using personal credit cards to do these B2B transactions. How can we sort of address that market? I know you guys are doing work in terms of digitally issuing these cards, but not enough just yet. Would love to hear your thoughts.
Yeah. So, clearly COVID has in a way provided for this as well, that we had to do a lot of things digitally, starting from, administering the entire form, doing the video KYC and stuff like that. So for us now, as we speak, it's the entire nation, and one can apply a card from any place. That's one part of it. Second is in terms of underwriting part of it, earlier it used to be very difficult to, and now the data availability from various sources, and Sandeep mentioned about the modeling that we do in terms of, underwriting just vis-a-vis a balance sheet or the other alternate data sources which are available have gone up significantly, right? So I don't think it's an issue anymore for the right client. And the reach used to be an issue because you're not as digital earlier, and it would take a few days to gather all the documents and go to the nearest hub and process. All that is a passe now. We're able to, in fact, do many of these things completely end-to-end digital.
Probably the piece that one is still solving for, and lots more can be done, is last mile acceptance of a corporate/commercial card. So for an SME to receive money is one thing, or that long tail supplier, but if they have money, how do they spend it? So there's again a role that we have to all play as participants in this kind of journey, in also increasing acceptance of corporate and commercial cards. But I think Amarji said it. I think Vivek, you might want to add to that in terms of just SME issuance.
Yeah, look, I think it's well covered. Suffice to say, there are two ways. The other lens I would bring is, do you go after SMEs as a client segment? And yes, the answer is we do, because we have the intelligence to look at the underlying data as a bank, and we can see where the needs are. So we proactively go and basically do the digital underwriting and provide the commercial card proposition. But that's connecting to SMEs one by one. One of the key things I'm very fond of saying is, how do I connect to one to connect to many, right? So I think the point is, I can therefore go down the supply chain route, right? Connect to an anchor, look at the long tail of suppliers that have been unbanked, underbanked, right? Because that to me is a much easier way for us to really solve for the entire supply chain, connect to one to connect to many.
I'll just probably add a little bit there, right? I think the question is spot on, right? A lot of time when we go out and tell SMEs that, look, there is a commercial card or a corporate card or a company card, or maybe sometimes just a business card for that matter, which is available to you to sort of take care of your company expenses, many of them sort of turn around and say, oh, is there something like that? We were not even aware of that, right? So I think there's a lot of education that needs to happen. People are not aware that there is a product like that. They've been sort of putting the expenses on their personal card all this while and then reimbursing it from their finance, right? So I think that's one. The second, which is the whole network effect, right? I think today as EnKash, we partner with a lot of these B2B marketplaces. The top 5 B2B marketplaces are already tied up, integrated with EnKash, where we go have an ability to look at where these SMEs are, right? Because it's very hard to go and tap into SMEs one by one, like Vivek said, right? So one way of doing it is to sort of obviously go through the supply chain mechanism. The other thing is to go via these marketplaces where these SMEs are actually doing business, right? And a lot of these SMEs are moving from an offline world to online world now, trying to sell more and more things online. And there's a lot of alternative data that is getting created, which tells us and the banks that is this SME really eligible beyond just looking at their bureau score. So I think that's something which is also working quite well for us.
Anybody else? Okay, I think we can close the session then. Thanks so much, gentlemen, for joining us for this conversation, and thank you so much.
Thank you so much for having
so
us.
much effort to try and explain everything to us, and thank you so much for sitting patiently and watching.
Thank you.